What if I told you the world's most powerful currency is quietly losing its throne, not in one dramatic crash, but in slow, invisible steps that almost no one is talking about? No emergency broadcast, no official announcement, no panic headlines. Yet behind closed doors, the biggest banks, governments, and central institutions on Earth are preparing for a future where the US dollar is no longer king. This is not speculation. This is not conspiracy. This is a pattern, and history shows us exactly how it ends. Today, I'll show you why the dollar's collapse has already begun, what the world's financial elites are doing about it, and what this means for your money, your savings, and your future. Stay until the end, because what you'll hear today could change how you think about money forever. For nearly 80 years, the US dollar has ruled the global financial system. After World War II, the world needed stability. The US emerged as the strongest economy, holding over 70% of the world's gold reserves. In 1944, the Bretton Woods system made the dollar the world's anchor currency, backed by gold, trusted globally, and used for international trade. Later, in 1971, the gold backing was removed, but the dollar didn't fall. Instead, something even more powerful replaced gold: trust and global dependence. Oil, commodities, trade contracts, global debt, all priced in dollars. Central banks stockpiled dollars. Nations borrowed in dollars. Corporations invoiced in dollars. By 2000, the dollar made up over 70% of global foreign exchange reserves. The dollar wasn't just money. It became power, influence, and control. But history shows us something important. No reserve currency lasts forever. Not the British pound, not the Dutch guilder, not the Roman denarius. And now, the dollar is entering the same historical phase. Let's start with the most obvious and most dangerous signal: debt. The United States national debt has now surpassed $34 trillion, more than the entire U.S. economy produces in a year. To put this in perspective, in 2000, U.S. debt was about $5.7 trillion. In 2008, it reached $10 trillion. After COVID, it exploded, and it's still accelerating. But the real danger isn't the number. It's the cost of servicing that debt. In 2024 alone, the U.S. paid over $1 trillion just in interest, more than it spends on defense, education, or infrastructure. This creates a deadly cycle. Borrow more, pay more, interest borrow, even more, print more money, weaken the currency. This is not sustainable. No system in history has survived this pattern. And here's the critical point: foreign buyers are no longer eager to finance this debt. China has reduced its U.S. Treasury holdings by more than 40% since its peak. Japan, once the largest foreign holder, is now quietly diversifying. Even oil-rich nations are reducing dollar exposure. This means the U.S. is increasingly funding itself by printing money. And when money supply rises faster than economic output, purchasing power collapses. Let's talk about money creation, because this is where collapse truly begins. Between 2020 and 2022, the U.S. created over 40% of all dollars in existence. Let that sink in. In just 2 years, almost half of the dollar supply was created out of nothing. This wasn't free money. This was debt monetization, converting government borrowing into newly printed money. Historically, this always leads to asset bubbles, currency debasement, and eventually, loss of confidence. You saw it in Weimar Germany, 1920s, Zimbabwe, 2000s, Venezuela, 2010s. But the U.S. doesn't experience hyperinflation overnight because the dollar is still global. Instead, inflation shows up as housing becoming unaffordable, food prices rising, healthcare costs exploding, wages lagging behind real expenses. This is hidden inflation, not collapse yet, but erosion. And erosion is how reserve currencies die. Now here's where things get truly serious. While politicians debate budgets, while media talks about interest rates, banks are preparing for something much bigger. Since 2010, central banks have become net buyers of gold after decades of selling it. But since 2022, something unprecedented has happened. In 2022 alone, central banks bought over 1,100 tons of gold, the largest annual purchase in recorded history. In 2023 and 2024, purchases remain near record levels. Who's buying? China, Russia, India, Turkey, Middle Eastern nations, emerging economies. Why gold? Because gold is no one's liability, immune to currency debasement, a hedge against monetary collapse, a universal store of value for 5,000 years. Central banks are quietly saying, we no longer trust the paper system. They are preparing for a world where the dollar weakens, the financial system resets, and confidence shifts away from fiat currencies. This is not coincidence. This is preparation. Now, let's talk about something few people truly understand. De-dollarization. This doesn't mean the dollar collapses tomorrow. It means the world slowly stops needing it. And that process is already accelerating. Countries are now trading oil without dollars, settling trade in local currencies, creating bilateral agreements that bypass the dollar, building alternative payment systems to SWIFT. Examples: China and Russia now conduct most of their trade in yuan and rubles. Saudi Arabia has signaled willingness to sell oil in currencies other than the dollar. BRICS nations are actively exploring a new reserve framework. ASEAN and African nations are reducing dollar dependence in regional trade. Even more important, global reserve diversification is accelerating. The dollar share of global reserves has fallen from over 70% in 2000 to around 58% today, and falling. That decline may look slow, but historically, reserve currency collapses happen gradually, then suddenly. First, confidence erodes. Then alternatives strengthen. Then, one crisis triggers a rapid shift. And we're now deep in the erosion phase. Here's something most economic analyses miss. Currency collapse is not primarily financial, it's psychological. A currency works because people believe. Others will accept it tomorrow. It will retain purchasing power. It represents real value. Once that belief cracks, even slightly, everything changes. We are already seeing growing distrust in institutions, rising skepticism towards central banks, increased demand for real assets, a cultural shift toward decentralization and self-sovereignty. People aren't asking, is inflation temporary? They're asking, is the system broken? And when trust disappears, money stops functioning as money. It becomes just paper. This is how collapse begins, not with chaos, but with doubt. So why does 2026 matter? Not because of a prophecy, not because of a single event, but because of structural timing. By 2026, massive government debt must be refinanced. Interest costs will be significantly higher. Demographic pressures will intensify. Fiscal space will shrink, and monetary credibility will be increasingly strained. This creates what economists call a sovereign debt trap. Governments cannot raise rates without crashing the economy, cannot cut spending without social unrest, cannot stop printing without financial collapse. So they do the only thing left. They inflate the debt away. And inflation is simply a hidden default. This doesn't mean the dollar vanishes in 2026. It means the system enters its most unstable phase. History shows that once a reserve currency enters this phase, the end is no longer a question of if, only when. Now let's bring this down to you. Not governments, not banks, you. What does this mean for your savings, your income, your future? It means cash loses purchasing power over time. Debt becomes more expensive. Asset ownership becomes critical. Financial literacy becomes survival. And blind trust in institutions becomes dangerous. This does not mean panic. This does not mean fear. This means preparation. Historically, during currency transitions, those who hold real assets survive. Those who rely solely on paper wealth suffer. Those who understand the system adapt. Those who ignore it pay the price. This is not about becoming rich. This is about not becoming poor. If this video opened your eyes, don't ignore it. Study. Prepare. Think long-term. Protect your future, because the greatest financial risk today is not volatility. It's ignorance. Subscribe for more deep, truthful, and future-focused analysis, because understanding the system is the first step to surviving it.